Well, good morning, everyone. This is Dustin Hobbs. I'm the Communications Director with the California Mortgage Bankers Association. Welcome to this morning's webinar titled How Technology is Changing the Life of the LO. We've got a couple of really good speakers, three really good speakers this morning, and I'm excited to turn it over to them here in a few moments. But before we do that, I want to thank our sponsors at the Real Estate Services Trust, or REST. So if you're an employer in the real estate services industry, I'm sure that you're feeling that pressure this year, especially this year, to remain competitive against other firms that are trying to lure your seasoned employees, many of whom may actually be on this call in attendance. So with high employee turnover costing you valuable time and money, you've probably already leveraged common strategies to retain these employees. But I'll let you know, the California MBA, at the California MBA, we found one fundamental method that's far superior than likely anything you've tried so far, and that's providing a competitive employee benefits package. So the California MBA has partnered with Marsh & McLennan Agency, a nationwide top leading brokerage firm, to form the Real Estate Services Trust. And essentially, we give big company benefits to smaller companies in the real estate services space. So we provide these companies competitive benefit plan options at affordable rates. And so if you're an employer with 20 or more enrolled employees, you can take advantage of these large group purchasing power options. And so I encourage you, there's a number on the screen there and the website to check it out. If you're a member of the California MBA, this is an exclusive benefit to you. So if you're not a member, this is likely a great way to join and then check out and see if REST is right for you. So with that out of the way, let's see who our speakers are this morning. So we've got John Soroka. This is I think maybe the first webinar for this committee that John's ever missed. John had to be out of the office today, so I'm filling in for him, moderating the call this morning. But we've got Van Vaziri with Blend, and Tony Markland with Alcova Mortgage, and then Dan White with Fairway Independent Mortgage Corp. And so we've got three really good speakers this morning, and I don't want to take up any more time. So Van, I'm going to turn this over to you to get us started here. So give me 1 second here, and I'll make you the presenter, and then you can take it away.
Awesome. Thank you for that introduction. And welcome, everybody. Thank you for joining the webinar. I happen to be presenting from Blend, but today is really meant to be an educational session about digital mortgage in general, and how is that technology changing the role of and the life of the loan officer as we know it. Cool. So if you'd ask people way back when what they wanted, they probably would have said faster horses when there's horse-drawn carriages. And what we're talking about today is how we can get you in the car but keep you in the driver's seat. And that's really what digital mortgage technology is designed to do. Consumer expectations have changed. Some of the companies here are the ones that have propagated that change. And that change is seeped into mortgage world. And we're seeing technologies pop up that are helping now create that one-tap type experience for the mortgage process. And along that, folks still want that human touch. And so what we're talking about is how we can really blend those two things together, the technology with that human touch. Before we dive into that, I think it's worthwhile touching on some of the key elements of a happy borrower. Greg Pedersen, who led the webinar last week, touched on some of these and some of the cool hacks that you could adopt to automate some of your marketing and status updates. But along similar lines, easy application experience today from any device, whether that's phone, over a mobile device, over the web, or even in person. It has to be really a seamless experience for the borrower. Beyond that, borrowers expect to close fast and on time. Not everybody needs a fast close, but everybody needs an on-time close. So how can we empower you and your teams to provide that level of service every single time? So it's the rule, not the exception. Finally, a clear understanding, or almost finally, a clear understanding of the options that are in front of them. They want to get through the application process and really get to the meat and bones of the conversation. What are their loan options? And that's where the secret sauce of the loan officer comes in. And clear expectations of what to expect and status updates. They want to know at any given point in time, where do they stand with their loan? And finally, regular milestone updates. I think 4 and 5 go together hand in hand. So just a little bit about the market today. There's over 1 billion applications being processed, digital mortgage applications being processed daily just through Blend. And when you take it into consideration with all the other providers out there, it's well over a few billion applications a day. So with that, we've been able to glean some interesting insights. About 31% of borrowers are applying for a loan through a mobile device. That number is steadily and slowly ticking up. And then beyond that, about 56% of borrowers are applying for loans outside of business hours. So again, going back to flexibility, empowering you and your borrowers to be able to engage when is right for them. Before we go into our speakers for today, I wanted to throw up one quote that I thought was quite telling. A lot of you might be wondering, what can a digital mortgage even do for me? This is really, I think, quite sums it up. Having an intuitive system that allows you to get applications and even potential follow-up documents without you having to touch that loan file. And we'll go into what that means as for you with some stories with our loan officers today. And before doing that, again, I want to just kind of mention that this whole idea is how can we make the customer service that your brand has become known for match the customer experience, and how can we have those two things really be at par? You can go in, a quick story we tell here at Blend is that when you go into the DMV, you can have the best person behind the counter helping you with your whatever you're there for. But at the end of the day, if you go home and you rate that experience at the DMV, more likely than not, you'll still consider it a poor experience because the experience overall was broken, even though the customer service element was superb. So real life impact of digital mortgage technology, 2 before and after stories. I am going to kick it over to Tony, who is going to share with us some stories. And Tony has had access to digital mortgage technology for some time, and I think he has an interesting before and after story. So without further ado, Tony, can you hear me?
I can hear you. Can you hear me?
Yes, I can.
All right.
Tony, what was your initial reaction with this whole digital mortgage thing?
Well, I've been in this for about 15 years now, and of course I know everything, and I'm the best, right? So I was like leading the resistance pack. No way, old school, this new thing, it's trying to take over, but I just don't think it's going to work very well. Was what my first initial reaction was. So, reading information and material, what we do every day is all about serving our borrowers. So me spending a lot of time on the phone with our borrowers is what I've done to serve my borrowers for the last 15 years, right? So the old saying goes, when you're through changing, you're through. So I said, you know what? Let me give this a shot, because if this is what the borrowers, if this is where it's going, let me see where it takes us. So with only that as my inspiration, I started to use Blend, and surprisingly enough, when I would talk to borrowers, I'd give them an option. I'd say, listen, we can talk now. I can get some information over the phone, or I could send you a link to a quick app. You can have this thing done in less than 10 minutes. It's safe. It's secure. It notifies me when you start it, notifies me when you finish it. It imports right into my system, and either in the next 20 minutes, or when I get home, or when I get back to the office, whatever the case may be, I'll import that file and I'll call you right back. Would that be okay, or would you rather talk? And I started to get borrower after borrower after borrower said, yeah, send me the link. So I was like, well, I guess I might be wrong here. And that was probably about a year ago. So that's kind of what started. The borrowers Every time I would ask them, now you have those few, the older folks that have the jitterbugs, or they don't have a computer, or they don't have a smartphone, or whatever. You make those concessions when you need to. But I have found 9 out of 10 people, they're okay with getting the link.
That's awesome. And so how would you say your role has kind of evolved since adopting this type of a technology?
Well, I mean, it's really freed up. It's really freed up a lot of time to do other things. And I'd like to make the analogy, and I really sat long and hard about this because I've talked about this to other people, in particular with my company. You're out on an appointment during the week. You're busy taking care of a loan at your office. It's Saturday night. You're out. I get calls all times a day, every day, all week, weekends, it doesn't matter. So that gives me the option of instead of going off to a corner, pulling up my notepad on my cell phone, taking their information over the phone, I just give them that quick little spiel. And my first argument was, and I'm sure everybody on here who's been doing this for a while, I'm not building that trust and that rapport with that client. When I talk to them, getting this information, that's when I'm, developing the relationship, earning the trust, doing all that kind of stuff. And then I started to really think about this. I went to the doctor one day, and I had to fill out a bunch of paperwork. And you know how you go to the doctor. You have to fill everything out. I'm like, oh, my God, I hate this. Just let me go see the doctor. And then I got back there. Doctor came back. We talked about what the real issues were. And then I left there, and I started thinking. I said, this is kind of like that. The application is not, forming a relationship. It's just getting information. So when the doctor came back, we talked about the issues, telling me what I need to do, how I need to do it, how we're going to do it. I started thinking, that's like Blend. So getting all this information isn't the be all end all. Getting the information and then calling the borrower back at your convenience or their convenience, whatever the case may be, they're taking the time and they're happy to do it at their leisure, whether it be in their office where there's a bunch of people around and they can't talk about their salary, or at night when it's more convenient for them. I'll call them back that night or the next morning, whatever the case may be. I started to realize, getting the information isn't the time when you build that relationship, earn that trust, that kind of thing. It's when I call them back and then start talking about their options, goals, objectives, short-term, long. I have all the information. So that is when you really start to, build the relationship, earn the trust, and it has worked great for me. So that's kind of like, that's my story in a nutshell, and it has been fantastic.
Cool, Tony. Dr. Markland, I should say. Thanks for sharing that story. That's awesome. Maybe one final quick tidbit. What do you find yourself doing with some of this extra time that it sounds like this technology has afforded you?
Oh, it frees me up to go, continue to build, galvanize the relationships I already had with agents, referral partners, more free time to go do things with my family or whatever the case may be. It's a convenience, and you're not cutting the borrower out. You're not cutting them short. And that's what I've realized. It's seeing is believing. So whether it's more time to go out and do more work, or whether it's you choose it to get more time to go play and do things with your family, I do a happy medium. I love to work. So it frees up it builds a capacity so you can take more business in. I always said, if your head's always under the hood, you're not out getting new cars to come in the garage. So that frees me up to go out and try to earn more business. And the process, the borrowers love the process. It's easy, it's simple, it's secure, and it's just, to me, it's the way to go. And I was so against it at first. I mean, I told my owner, I called him, I said, I ain't doing this. I'm not doing this. I gave it a shot, and then, rest is history.
Tony, the digital mortgage evangelist, thank you so much for sharing that. And we're going to jump over to one more loan officer here who's been doing this for a while. He's with a successful company today. Dan, why don't you maybe share with us a little bit about your initial thoughts around this whole digital mortgage thing?
Sure. So I tend to adapt technology pretty early on, but my problem with a lot of the digital mortgage solutions that first came out is they were very clunky. They didn't operate very well. We were using Encompass applications, which I just didn't like. The borrowers would miss information. So I was resistant. And about 2 years ago, we started using Blend, and I use a different system currently, but very similar. And it's so user friendly that people speed through applications. And I actually find that they're more accurate than taking a 1003. When they can do it on their own time at home at night, they typically fill in more information more accurately. So that's been my experience, and I do probably 99% of my applications online.
That's awesome. So it sounds like that you're an early adopter. The technology wasn't quite yet there, but when you circled back around, you found that I think it improved a lot, and it works a lot more seamlessly with your different systems today.
Yep, for sure.
Cool. And I guess that kind of answers what made you change your mind. Kind of just sounds like just waiting around for the technology to progress a little bit more. And
yep.
How would you say your role has evolved since you kind of embraced this technology?
It gets me out of files. So instead of the digital mortgage technology on the front side of things is just crucially important to my business. I just wouldn't make a move without it. I wouldn't originate without it right now. It's that important. We basically, it allows you to quit focusing on document collection, on being more of a processor, and allows you to kind of graduate. And like I do just a lot like Tony does. I like if I'm in Costco and somebody calls me, I'll take a few minutes to discuss what they want to do, and I'll let them know that I'm busy right there and I'm tied up, and I will text them the link. That will always be with them on their phone, and they can either enter the application on their phone, or if they're more comfortable at their desktop later, they'll put it in at that point. And most of my applications do come in after hours because that's when people are, I think, more comfortable doing that. And it's actually, we have a higher capture rate than if I'm following up with them trying to get 20 minutes of their time to take a phone app. So it's been extremely efficient and more accurate as far as data collection goes, and gives me a ton of flexibility. So it's really important.
That's awesome. Maybe Digital Mortgage should team up with Costco and say returning your Costco trips to their original glory.
Like I told you yesterday, I'm there too much, but that's the wife's issue. So
thank you so much for that, for those stories, Dan and Tony. If you have any questions for listeners who are on today, if you have any questions about what you can do to advocate for these internally at your organizations, a tool like Blend or something similar. Blend's not right for every organization. There's a lot of great tools out there. Reach out to the CMBA. They can share with you some techniques for advocating for this type of technology internally. But beyond that, give you a list of things that you have to be looking for any technology provider you're considering. CMBA does a really good job of providing some thought leadership around these types of things, especially as it pertains to tech. So with that being said, I will close off my section. Thank you so much for this opportunity, Dustin.
All right, thank you, Van. Appreciate that. Great presentation and some good questions there. So now we're going to have a chance to take some questions from the audience here. So if you've got a question, you can use the question function in GoToWebinar there. And while folks are submitting questions, I've got a couple of quick announcements. So if you are in California and you want to do some networking has never been more important than it is now. The California MBA hosts twice a month. We host free networking events at the offices of our members, and those are usually between 5 and 7. It's a great opportunity. We usually get between 40 to 60 or so people, depending on location, and it's just a great way to get to know some of the folks around your area. So make sure to go to the California MBA website, check out our events page, and see which events are coming up in your area. I think we've got one coming up in Santa Ana. We've got one in San Francisco coming up. So we're kind of all over the state at the moment. We just had a couple of them in the last few weeks in the LA area. We've actually got one coming up in downtown LA here in a couple of months. And I do want to mention also that earlier this week, we dropped the first episode of our monthly podcast. It's called Connect. And they're one-on-one interviews with headliners, newsmakers in the industry. And I think particularly for this audience, our first podcast featured Bill Dallas, who is President and CEO Finance of America. And so make sure to go to our YouTube channel, subscribe, and listen to Bill's thoughts on the industry. If you're familiar with Bill Dallas, you know that he's got lots of thoughts on just about every subject under the sun. So if you're in the car driving to or from work, it's a great opportunity to sort of catch up and hear what Bill has to say. So I've got a couple of questions in here. So let me see here, and I'm not sure who wants to take this, Tony, Van, or Dan. One of you guys can take this. So the question is, what are the milestones you share with your borrowers or realtors?
I don't mind going. I do things a little differently. I have somebody on staff that an email goes out every Wednesday to the borrower and both agents as to what basically just like a blanket. Hey, appraisals in, titles in, waiting on a couple borrower conditions, so forth and so on. I send a video update to each agent every week. They both get one each week, and I also will either call or video my borrower, ask them how the process is going. I ask for grades along the way, how our service is going and so forth, because service is the number one main objective. Make sure service is going well. Any issues, please call me, because you can't fix something after the loan is done. You can address it while it's happening, any questions they have or what have you. But everybody is contacted every week, and we also have a CRM that every milestone docs are in, submitted to underwriting approval, appraisals in, so forth. That goes out with little videos every time those milestones are hit as well. So everybody is touched throughout the process. And I have picked up many a listing agent by these tactics as well. So it's very rare they're getting that type of feedback and communication. But that's just not normal out there is what I've experienced.
Well, I'll answer from a tech perspective. Anytime the borrower is going through the application process, the status of the application, pre-submit and post-submit, can be viewed from their borrower home portal. And I think that's a fundamental, right? Any technology you're looking at that's digital mortgage technology should have kind of a home portal where the borrower can go and see the status of their loan at any time. Some regular status updates could be just reminding them to come back and provide some documentation that hopefully is, if the system's intelligent enough, it's automatically providing a customized needs list based off the information that they're putting in the app. And then beyond the collection of the documentation, I think it depends on the integration that you have with the LOS. Different systems have different integrations with LOS, different LOSs to go deeper into providing status updates deeper as the loan progresses through the funnel. Good question.
All right. Next question I've got here, and this is likely for Dan and Tony. The questioner wants to know, is day one certainty part of the process for either of you?
Yeah, Tony, if it's okay with you, I'll take this one. Day one certainty is still evolving. The systems are in place for that, and the big thing is just embracing the system so that the borrowers actually provide you with their with their bank account information, and so that can be imported directly into the system. But it makes, if you don't get day one certainty through the systems, you can very easily, sometimes it takes a little manipulation in Desktop Underwriter or LP to get an appraisal waiver or whatever. But those systems are almost there in some cases, and in some cases they are there. So it really depends on what your company adapts Blend to, or whatever system they're using, as to whether day one certainty can be a part of it. But the technology exists for you to get actually generate an approval right there on the spot.
Cool.
Dan, this is Dustin. Real quick, if you wouldn't mind, I should probably ask you to do this, to define day one certainty for just those out there who may not be familiar.
Day one certainty is Fannie Mae and Freddie Mac's system to basically validate certain parts of the file immediately. In other words, their income, property value, and thereby generate reduced documentation that's needed to be collected in order to validate the findings. So. That's the way I would word it, at least.
Quick tidbit from the technology side, as far as Blend is concerned, we're actually collecting D1C during the application process. Some systems, they do it kind of as an afterthought. Both, I guess, depends on how you train your borrowers, but with Blend, that D1C reference number that's going to be captured and created at the point of during the application process would be porting over to your LOS, so there would not be any need for any type of manual intervention to capture D1C, at least for assets.
All right, and then Tony, did you want to chime in, or already been covered?
Well, I mean, I think what Dan was saying, it's all how you integrate in with your particular company. We use Day One Certainty and Veritax, and that I'm collecting pretty much just an ID from people, and we are getting the borrower's authorization through Blend automatically. So we're ordering WVOEs right up front if it's not an automatic hit. So that's been our goal, is less is best. So as little as I can collect from that borrower, the better. So there are some files where I just get an ID and that's it, and then third party verifies it all. It's insured and we don't have to worry about it. So we use it every chance we get.
Gotcha, great. So next question here, and this is again probably for Dan and Tony. How much has the digital mortgage technology changed LO productivity? So this would be like loans per month, or some other metric that you might have out there. So how much has that, just changed on a metric basis?
Well, I'm sure Dan will agree. I mean, it certainly frees you up to do more loans. So it's pretty tough. I mean, I'm doing anywhere from 25 to 30 loans a month, and it sure does make it a heck of a lot easier. Could I have done 25 or 30 loans a month before this? Yeah. Would I maybe have died doing it? Yeah. So it really, and I want to go back to what Dan said too, is the efficiency on the app. How many times have you gotten that pay stub and there's that child support deduction on the bottom? It's like, oh no. So stuff like that, it's efficient. And like Van was just saying, the work number goes right through it through application. So a lot of times, 5 minutes later after the application submitted, I get an email saying so-and-so's income has been validated through the work number. So again, if you want to do more loans, it frees you up to do more loans. If you want to do the loans you're doing better and you want more free time, that's what it does. So it really just depends on the prerogative of that LO and where they want their ceiling to be.
Yeah, I'm not sure you're going to like quantify, okay, you went from, because I'm between 10 and 15 loans a month. That's been my production over the years. So I'm not quite at Tony's level, but it helps you as an LO with your follow-up. It helps you, with managing your pipeline, and it increases your efficiency, your accuracy tremendously. And like Tony's saying, with Day One Certainty, you can get an application in and move on sometimes to the next file. I mean, you're not doing that, with taking phone apps typically. So.
All right, appreciate that, guys. Next question. This one's for Van, actually, and it's a good Blend question. This is something that actually I had sort of the same question. So the question is Blend a good solution for a one-person shop, or is it more cost-effective and make more sense for a bigger shop?
It's definitely an enterprise solution. I don't think it would make sense for a single man shop. There are tools out there designed specifically for one or two individuals. So not to say that you can't take advantage of technology just because you wouldn't be able to use Blend.
Gotcha. Thanks. So I know Van and Tony and Dan, you guys have got a split here in a few minutes, but I've got a couple more questions. And Van, if you need to take off, I know you've got a commitment you can't get out of. So question here is for either Tony or Dan. How do you explain the borrower's role in timely response to maintaining closing goals? I think that makes sense. We've talked a lot about the LO's role, but how do you guys explain sort of the borrower's role?
Dan, go ahead. You go first.
I ask my borrowers to give us response in 24, 48 hours at worst. So I try to set that expectation up front. And the reason we do that is because they can literally we have technology where they can take a picture of their document with their smartphone and upload it into our system. So it just makes collection easier. So we do ask them to participate in that way. And that we really don't have an issue with borrowers lagging. So that's kind of our process and the way we set it up.
Yeah, same here, Dan, with me. What we do is when we look at a file, like I said, the doctor coming in the room, that's the doctor coming in the room. Hey, you've got overtime here. You've got commission, bonus, what's, this or that. So we isolate and we solve any potential issue we can possibly see up front. So we get all that information up front. Our goal is to have less than 2 borrower conditions once the file is submitted to underwriting. So we try to get we've got solutions now with earnest money deposits and assets with the automated asset statement and blend. Everybody's taking them now. So we can do that before I even get to file. They've already linked up their bank account information. Gift funds seem to be about the only thing that seems to be a big pain in the rear. But you can't do that, of course, everybody knows, until that stuff's executed. But if you set the table up front, set the proper expectations, these people are motivated. They want to close on these homes. You get as much information up front as you possibly can. I tell people it's like putting a 1,000-piece jigsaw puzzle together up front. We want to put all the pieces together up front now, fix it, so even before you find a house, we're smooth sailing. But yeah, once we ask for it, we put the follow up and blend, and we tell them, please have this uploaded within 24 hours. Some of them they do, but it's 2 days at the most.
All right, thanks, guys. Well, I want to thank our speakers, Dan White, Tony Markland, and Van Vaziri with Blend. I mean, really great insight from all three of you. So if you have any further questions, I think we actually had 1 or 2 other questions that we didn't have time to get to. If you have any questions for either of our 3 speakers or any of our 3 speakers, I've got all their information there. And just a heads up that this webinar is recorded and will be available likely Friday on the California MBA website at cmba.com, and then just follow the committee page to find the MTAM committee, and then you'll be able to view that. Or you could just go to our YouTube channel, and that should be the first video up there and that'll be likely Friday. So again, thanks to our speakers, and then one final reminder I think I had in here. Nope, that was it. We got the recording. So thanks again, guys. And if you have any further questions about the MTAM committee, make sure and shoot me an email. My email is dustin@cmba.com. And with that, I'll close this out and invite everyone to have a great weekend.